Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, February 1st. Welcome to the start of February trade and FOMC day. The interest rate decision is on tap at 2 o'clock today, guys. Not much is expected by way of change, but certainly we'll be looking deep into the language, and we'll talk about the implications of that impact on the dollar crosses. So I have the DXY, dollar CAD, euro dollar, Kiwi dollar. We'll touch base on Aussie. Don't really like it right now, but we'll take a look. I'm not really personally following dollar yen, but if there's questions on that, we'll take a look as well. I want to review Aussie yen, sterling, Kiwi, and gold is what's on my list. As always, feel free to throw out any messages or personal setups you guys want to look at. Mike, good morning to you. Peter, great to see you in the room. Mark, cheers, sir. Carlos, Gary, good to be with you guys this morning. So, interest rate decisions on tap, like I said, at 2 o'clock. No changes expected. This is not your quarterly interest rate decision, so it's just going to be the release of the policy statement. At the end of the day, we're not expecting anything new, but what markets will be looking for is if there's any commentary with respect to the new administration, whether it's the impact it's going to have on fiscal policy moving forward, or the flip side of that being a possible negative impact on fiscal policy moving forward, especially with all these threats of trade tariffs and whatnot. So if there's any type of commentary in the rhetoric, or in the statement rather, with regards to that, the markets will be paying attention. I think that's the main thing you want to take cues from heading into the release. Looking at the Fed fund futures as it pertains to interest rate decisions and expectations, refresh this real quick. As it stands right now, June still looks like the most probable date. We popped back into 70% territory. I sent you guys this link yesterday. I'm going to put it back in the message board again today. This is the best place to actually track interest rate expectations from Fed fund futures. And the reason I like this a little bit better, even more so than the terminal, guys, is because it actually gives you a timestamp update of when it last updated. So again, just to show you how to read this, for June, only a 28% chance that we'll see a hold. 1 minus that gives us, again, about a 72% chance that we'll see a hike in June. If we come back and look at Fed fund futures here in the terminal, a little bit different of a readout, but pretty much looking at the same thing. Okay, this softened, or solidified rather, even more. Remember, it softened to 68% chance. We were looking at that yesterday. So seeing a little bit of a bounce here in the dollar index off of that key support that we noted, 99.53. Isn't that surprising? Good morning, Mike. Defoe, Gatto, look at the abomination for fun, if nothing else, says Gary. You got it, Gary. I'll put it right on the list, brother. I figured as much, right? Hello, sir. Good morning, says Kamal. No worries, sir. Great to see you in the room as always. So with that in mind, I'll keep you updated on SB Squawk and on Twitter as far as anything that kind of jumps out from the policy statement, but that's what we're looking for. Trump, fiscal policy concerns, anything that has to do with any type of word tariff might freak out the markets. I don't think we'll get any of that. I'm just prepping you guys to what to look for. I think it'll be a relatively run-of-the-mill, but you know, the economic data is pretty hard for the Fed to continue to sit on the sidelines. Looking at today's ADP employment change that just came out ahead of the webinar here, 246,000. Expectations were for a print of 168. Slight downward revision, but minuscule amount considering the beat that we got this month. Again, you don't want to use this to correlate too much with non-farm payrolls, obviously, which is on tap this Friday. NFPs are expected to come in at 175. But the point being, guys, is that the employment, you know, another thing to look for, let me say this, in today's statement is, excuse me, getting so excited here. Another thing to look for in today's statement is if they continue to suggest that the market's approaching full employment. And you know, if we're pretty much there on the employment front and they're seeing that CPI or core inflation is starting to uptick, we saw those wage inflation numbers start to improve, it's very hard for them to continue to sit on the sidelines. So things to look for in today's release, Again, we'll come back to this and we'll look at these expectations for Fed fund futures, but as it stands right now, still looking at June as the earliest possibility for a Fed hike. Okay, let's jump into the dollar index. We'll jump into some of the dollar crosses. I'm currently flat. I've been in and out of dollar CAD, euro dollar. Dollar CAD was a nice one. We caught a nice bounce, almost 80 pips on that in the overnight trade. Euro, we just caught a nice short on that for 30 pips. Kiwi we'll talk about as well. Looks like it was a false break up there yesterday, but I'm looking for today's close to really confirm that. Okay, one last thing. Gary's saying both gold and dollar yen randomly jumped about 15 minutes ago. Can't find a reason. Did Trump or fat fingers? So we got the release of ADP. I think that's what it was, Gary. Yeah, it was stronger than expected. You saw the dollar really see a nice little pop. We've been at support, but you really didn't see that rebound until that print kind of prompted it. Moving ahead into the rest of the U.S. session here today, keep in mind 10 o'clock you do get the ISM manufacturing data. Looking for a print of about 55.0, up from 54.5. These releases should pretty much be moot point at this point. I don't really think you'll get much off this 2 o'clock interest rate decision. Again, there's no press or anything, guys, so we're going to look right into the statement, and no interest rate change is expected. Okay, heading into the U.S. trade session, here is what the relative performance looks like on the dollar crosses. See the British pound, strongest performer in overnight trade, up 0.52%. The rest is pretty much a wash, right? The Aussie's down, Swissies down, Euro down. Biggest losers, Kiwi and Yen, both of which made a nice little reversal. Dollar yen, obviously a nice little rebound. Kiwi with a pullback off resistance. So we'll take a look at both of those. But sterling, still our favorite trade, right? Not a bad setup. And certainly, Jamie was right on point as far as calling those longs at the start of last week on the turn that we saw in the sterling. But we'll touch on those crosses if we have time later today. Sterling Kiwi still actually making a really big move. You can imagine with the discrepancy here, Kiwi worst performer, Sterling strongest performer. Sterling Kiwi made a beautiful turn. So we'll take a look at that. All right. Here's what the dollar index looks like heading into the U.S. trade session. Here's what we looked like yesterday. So again, I just wanted to highlight 99.53. We talked about it here in the webinar. It's the January high day close. The actual stretch low was actually pretty much right in line with the December low. You have that slope support that we were looking at as well, extending off the lows. What is that, from April of last year? You had the 100-day moving average. Lots stacked up here. So here's what it looked like on the intraday. Again, I was looking for a decent bounce. You got to keep in mind the bearish bias still remains intact while below the weekly open, 100 spot 43. That's still our bearish invalidation level near term. Downside break, you're still looking for the lower parallel. Key support into 98.87, 98.99. Okay, and that's the 1618 extension off the highs. Lower parallel converges on that a little bit later on in the week. But, I wouldn't be surprised to see a little bit more recovery here in the index, and especially if they become a little bit less dovish, more hawkish. I don't think more hawkish is going to be the word anyone's going to use, but if they start to cite the expectations that the economy is improving and with the expectations of improved fiscal policy, maybe that could stoke a near-term recovery here. Questions on the index. Levels unchanged from yesterday. I'm not surprised. We'll probably see a little more lateral movement here into the 2 o'clock hour, but even on the rebound, really nice recovery or a reversal right off that 50 line in overnight. Pull back again into the January high day close, and again, seeing that little pop there. So be nimble, okay? Be super nimble heading into the release. If you're trading anything ahead of the FOMC, which I don't really highly recommend. Again, I've just been messing around here with the euro. We were just off resistance and there was a decent trigger, so I took it. But in general, you kind of want to keep your feet real light here as we head into the release. Nat gas and copper ranges also, please, Conwell. I'll put that on the list. I think nat gas looks better to me than copper does, but we'll take a look at both if we have time. Okay. Dollar index going once, going twice. Here is dollar CAD from yesterday. So too early to tell. Again, here's the daily chart. Too early to tell if this is the turn, right? But I am working with a near-term assumption that we've made a pretty significant rebound here just on the near-term scope of what price action did. Both of the severity of the reversal, the fact that this median line has caught, this is an hourly chart. I'm going to zoom it out to a 4-hour, but you can see how this median line, real clean. And we can't get, decent closes below it. You did get an hourly close below it, but that didn't last too long. Whoop. And at the end of the day, you've been marking some divergence all into that low. Price action making a lower low, both on the 4-hour. Again, if you take a look at the 2-hour, same type of deal. Price action making a lower low as the oscillator makes a higher low. So it just looks like it's ready for a little bit of a pop. You're coming off of key support. Again, the daily chart highlights this critical zone. I'll bring your attention to this purple line, which we've been following just off the lows from June. Tagged it twice in June, again in August, and that converges right here. So it was worth, stab at the long side, I think, just off of how that spiked into it early into U.S. trade. You got a decent trigger. Again, as I cited in the report, the initial target was just this 130.80 level. And I took off a couple of different picks to lighten the load limit to hit at 130.80 or just ahead of that in overnight trade. We got a little pullback, and that's what we're getting right now. You still want to look at the highs from overnight. If that does break, look at the weekly open. That's 131.30. And then the May high is still a target at 131.88 if we do break. That's going to necessitate a push through the weekly opening range high. Do recognize that. But on a recovery in the dollar, if we do get it, topside targets here are pretty clean. With the same respect, sub 29.60, sayonara. This thing is probably going to collapse if we go anywhere near as the low that we made in trade, in U.S. trade yesterday. So here's what the near-term chart looked like the 120. Here's what it looks like now. And here's what it looked like on the near-term charts. So again, sometimes luck is better than skill. So again, really nice pinpoint on the entry there, but there were a couple of exits that we took out ahead of the close of U.S. trade yesterday. Obviously, it's not going to show the next day, but close out the rest here for almost 80 pips on that upside, just ahead of 30.80, which was the target I noted. And then here's the turnaround. There was another opportunity to get long right here I missed. And I wanted to take it, but I decided to play the dollar long play through euro this morning just on account of the euro stretch higher. We'll look at that next, but from here, do respect the resistance that we're at. These are the Tokyo highs, Sydney highs, and prices at near-term resistance off that trend line from the highs back on the 20th. You got the FOMC on tap, and you have the start of February trade. NFPs are on tap in just a couple of days, so just a quick prep. Lighten the position load as far as your leverage is concerned, but there is plenty of opportunity once we clear these ranges and today's event risk. Any questions on dollar CAD? So, the implications, I guess we'll take a quick segue. That was number 2. We'll take a quick segue into crude just to kind of give you an update on those levels. And the only thing I wanted to highlight here, guys, is that pitchfork that we had talked about yesterday. If that is in play, you're testing resistance right now. So remember the initial touch that we got was pretty impressive, right? 618 retracement just of the near-term decline off the highs, converged really nice on the upper median line parallel here, and you got a real nice snapback of it. It made also a nice, or constituted rather, a very nice weekly opening range, and that's what you got right now already. So I'm not really interested in playing the long side, even if it breaches through. Conwall, I guess this is for you as well, just because you're coming into some crazy resistance still at 55. Remember the weekly chart, okay? And what a critical region this is. So more so a downside break is what would be a little bit more appetizing to me for a little bit more of a correction lower, and that would be certainly in line with our favorite dollar CAD rebound to the upside. So keep in mind the monthly open, even above 54.40 here, the monthly opens at 53.80, and then key resistance is just higher. But let's see if we can hold this formation heading into today's trade session. Okay, so that's a quick review on crude. Not really much to do there. Number 3. Let's jump into euro dollar, number 4. Here is what euro looks like heading into the FOMC. The stretch higher is still kind of governed by this 108.19 level. Now, that's just a 50% retracement, a decline off the highs that you made from November. But you also have the 100-day moving average, which is kind of on a closed basis still offering some resistance, and the 50 line of this current operative slope. So for euro, this is what I'm thinking. So this is what we wanted to highlight yesterday. Again, threat for a pullback off this region has been materializing, and I do think you can see a move, maybe even down as deep down as to the median line here, which would take you somewhere in the range of 107.50. Not to mention that while you're not getting divergence momentum, it's not the strongest momentum signature here, right? Price action's obviously making some more higher highs, stronger higher highs. The oscillator's not much to do there either. So exhaustion could be the play on the daily chart. It just harkens a warning ahead of 108.20, okay? And certainly if you were to get a pullback towards 107, even deeper than the median line, this would be an area of which I think you would get a lot more, a better risk to reward, okay? Better juice for your dollar here for an attempt at the long side again. Bearish invalidation, Commonwealth 55. You're talking about crude. Broader, longer term, weekly close, 55 is it. Yeah, 55 clears out. Forget about it. There's tons of upside. But I don't want to be long into 55. Cool? Remember, not only that, sorry guys to segue again, not only that, Commonwealth, but the weekly chart, look at the wick that we made into 55. You can't really see because I have the marker there, but if you move the marker, look at that wick into 55. And that's a weekly candle. So, yeah, by all means. But for euro, I digress. The threat was there. So here's what it looks like on the intraday chart. Here's what the chart looked like yesterday. Okay. Again, it looks like it made a break of the initial weekly opening range. You don't really want to do that too aggressively here because, again, we're heading in some major resistance and major event risk, but the failure just ahead of 108.20. And you saw what it did in overnight trade. Now, the target or the trigger that got me in this morning was just on this subsequent rally and failure at the highs. Again, if you take this into a closer term, here's what the 60-minute looked like last night. Here's the 60-minute looks like now. And I guess I could just show you the actual trigger. There we go. Was right here. Nice 3-point trigger right off the lows. You had some divergence as price action pressed into a new high. This is only a 5-minute trigger. And there it was, put you short. Really nice tight stop against the highs here. You're looking for about 22 pips per scalp, okay, as a quarter of the daily ATR. This is just leverage adjustment. There was your first drop. Again, that's post ADP. Last one took out the rest of that trade, and here's a little bit of a rebound. I still think you could see a move lower ahead of the FOMC, but I wouldn't want to get too aggressive off this. The premise of the trade was just on the account of you had such a really nice risk to reward. It's kind of worth jumping in. From here on out, I think look for a little bit of a drop lower. If you get that move towards 107, sort of the sweet spot, and heading into the 2 o'clock hour at the release, here's 1400 is exactly when it converges on the lower, or the 50 line here that you see in blue. So that would be sort of too sweet of a spot, but that's the ideal scenario. First things first, you see this gray line right here. That's just lower at 107.50. Now keep in mind on the daily chart, that gray line is what governed the entire advance last week. So that converges on the median line right here, right around 107.50 first. So 107.50, 107, both areas of interest for exhaustion on a wick down, especially if the dollar kind of wicks higher on an emotional rally into resistance on the index. If we were to rally really strong into this region, then you see a pullback, that might be the exhaustion that you would look to fade. And again, might be a decent play there for euro dollar. Any questions? Ultimately, 108.72, 2016 open. You don't want to stress right now. I put that as a soft target, but ultimately 108.72, 109.30, 109.36, subsequent topside targets on a breach of the highs here for euro. Any questions on euro? That's number 4. Okay, and we'll be hunting for more entries here. I don't really like to get too aggressive, like I said, ahead of the releases here, but we'll see if we can't kind of get a couple more intraday positions as we get closer. Next up is Kiwi dollar. Oh, Kiwi. She's a tricky one. I've been trying to get into this thing, and I'm really regretting not pulling the trigger earlier. I didn't want to double up on the dollar long positions because I was already in that euro position, but here it was. I talked about it last night, and I told you all to take it, but again, I couldn't get in myself. Here was the entry just now. And that's 72.95 into 72.92, our near-term bearish invalidation level. And we were talking about this level yesterday. It was tricky for this reason. It did close above it. So technically, I was saying if it closed above that 73 handle, look for a stretch higher and look for it to validate a breakout of this key region of resistance, which we talked about. March 2015, low day close. You had the August high day close. You had trendline resistance off the yearly high. You had former trendline support off last year's low. We closed above it. So, I mean, what do you do with that? The long wick was a tell, though. And then the real tell was last night when we started to dribble back below 73. And that's when we wrote this. Okay? The dribble back below was really kind of a tell that this thing, as I always say, when you see the breaks of these resistance regions, especially confluence, regions that have so much technical resistance, you want to see it plow through. And while you did in near-term price action, the quick recovery and move back below, certainly near-term is a risk. Okay, and definitely should be red flags all over the place. So there it was highlighted in red. Even on the near-term slope, you had the median line coming right off the low in that region. So basically, you're looking for a break below the weekly open, i.e. 72.35 to really validate basically, the correction lower and the break of this near-term rally in price. Here's what it looked like on the 120 minute. Here's what it looks like now. This is the hourly. Oops, this is the 2 hour. Okay, so you came right into the weekly open. So the initial target at 72.60 there was a nice little rebound. You got the opportunity to get right back in on this rally into resistance at 7,300, and here's the pullback. If you're holding shorts at this point, look for near-term support, near-term targets. I'd start to shave some off as you get into 72.50 here. Bottom end of that range is 72.35. That would constitute a basic 236 off the high. And the reason I'm a little concerned about it is it's also the objective weekly opening range low. So that's really the level to beat at any all costs. 72.35. If you make a move below that, I think you can, you can be a little bit more assertive as far as trying to play this as a correction to the downside. Also, I do want to take a look now that we have made that reversal again off of 73. I want to see what this extension looks like. It gives you a 72, 100% extension, 71.47. All right, don't stress that, but keep your eye on a soft target there at 72 as well. Again, too early to tell. If you're going to get confused, close your eyes real quick. Let me just take a look at what this looks like. All right. So I don't want to leave this on because I don't want to get this too confusing, but watch for support upcoming right here. In fact, the 100% extension converges on the 50 line basically heading into tomorrow, early tomorrow morning, and that's down here. So guys, I'm gonna feel free to take a quick snapshot of the screen, I guess, if you need these levels for future reference, but maybe a slope you want to keep an eye on. It's too early to tell. Again, I'd want to see if we get any play off this. If you take it off this high, you're basically there right now. Long and short of it is you want to stay bearish sub 73. I would mark serious bearish invalidation, or a level of which I'd want to get bullish again, back up here. Okay, along the median line. If you break back above the median line, forget about it. But as long as you stay sub 7,300, I think you want to look lower in Kiwi dollar. The potential for a breakout, above 73. Yeah, I'm just going to keep saying the same thing. Just watch 73. It's a nice divergence on those last two highs too. Okay. Theo says, same with Aussie dollar. Kamal says, thanks a lot for your awareness. Oh, you're more than welcome, Kamal. Same with Aussie dollar. I wouldn't necessarily agree same with Aussie dollar, Theo. On the near-term approach, I think Kiwi dollar has shown a little bit more promise as far as the reversal. Aussie dollar is a little bit different of a game. Any other questions here on Kiwi before we move up? I'll jump into Aussie right now. Graham, we did do dollar CAD. It was first up on tap, so I'll see if I could touch base on it really quick, but we did go in depth in that. Theo, any questions on Kiwi going once, going twice? Here's Aussie, Theo. This one will be number 6. Look, this thing has been so frustrating for me. So you guys know where I've been. I've been playing shorts off this thing from 76 or ever since we were heading into 76 for basically 3 weeks now. It hurt a little bit early on. It worked really good last week. This week, I did take a break-even hit on it. I think one scalp worked out at a core daily ATR, and I haven't done anything since. And I don't know what to do with this. I'm not going to lie to you. I don't know what to do with this. I know that we're on the long side here on the swing side of things, and certainly if this top side is able to make one final thrust, I think that target Jamie has set, I think 76.20, that's an easy target if we finally get a last thrust. Is this failure? I don't know. All I do know is there's been consolidation. Even on a closed basis, this thing is starting to get ugly, so I always tell you guys, bring it into a line chart and see kind of where that stands. Like, I don't like it. So if I had to play a long dollar position against a calm currency, I still think I prefer Kiwi, which is why I've highlighted that. And you guys should always be able to tell where my personal bias is, because just look at the last couple of updates. You'll see where I'm looking. And while I did highlight Aussie initially, it hasn't really been on the menu for me early this week. So the intraday chart, Theo, I'm looking at is the same as it was last week. No change. That high is still preserved. So that even the retracement remains the same. Again, put a gun to my head, I would say this thing probably makes another spike into like the upper parallel here that we missed. 76.20, basically Jamie's target, and then starts to collapse on a dollar kind of recovery. But I just, the technical merits of trying to actually trade that haven't presented themselves yet, in my humble opinion. And even price action on a near-term basis here shouldn't get you too excited. Whereas Kiwi dollar, well, yeah, that's a break of resistance and a failure high ever seen one. And even on the way down, back as resistance and a move lower. Now it puts the you know, the major focus on this region right here. Let me snap that for you. Puts the major focus on this region right here, but certainly overall a cleaner setup than what we're seeing, in my humble opinion, with Aussie. Theo, does that make sense? Oh, he says, yeah, his target was hit at 76.20. Awesome. Awesome. Any questions on Aussie? Yeah, I don't know if this is failure or not, but just note this, Theo. You're getting some divergence as you make that new high. The daily chart looks ugly. So we'd love to see it move lower. We'll see if we can't get this thing jamming here as we head into FOMC. That's Aussie dollar. Let's just jump into Aussie yen here. That's next on the list since we're on the Aussie. Here is Aussie dollar. I mean Aussie yen. Dun, dun, dun. Ooh, should hold on a little bit more of that euro. Here's euro at 107.60. Anyway, here's Aussie yen. So Pooja, are you with me here? There she is. Yeah, she's here. Here's, I mean, looks pretty clean. I think we had the right idea early in that week, huh? I'm holding small short from current levels. So I like the current level. The reversal day close has indeed offered a very nice pivot, and that's the level that we discussed right here on 86.06. So that was a reversal day close from last year, basically right after the highs that we made in December, and has been a very nice pivot here. So I think the focus range is right against that lower parallel and that level. On the daily chart, that's what's being highlighted. On the intraday chart, so that formation that we drew or that we were working with yesterday, 50 line, you got a nice little rebound here. Let me just adjust this. Turned ahead of the 50. Okay. So the only problem I see with that, Pooja, I'm not sure where you have your stop, but I do think you do risk another mounted rally here just towards the ML, this one. So if you take a look at this, check this out. It's the initial weekly opening range low that you made early on there for the Sunday open. The 50 line, you can actually probably choke it up to that high. Would even bring it up closer in time, right into the open. There, but basically, whoops, it would allow for one more high. You know what I mean? One stretch higher, pull back, stretch, and I'd look for exhaustion a little bit higher up. So I do like the idea, and certainly on the level of which on the daily chart, it's sort of kind of a rock solid level where we stopped. I recognize that, but just keep in mind from a formation standpoint, I would leave room for just one more high. Stop at 86.12. Okay, so you're basically trying to press it right against this high right here. Okay, I like how tight it is. If it moves up higher again, you know where to go. 86.35 would be an area of which I'd start to look for exhaustion high on this, but and that actually matches up pretty well with the highs that you made back here as well. See this? But yeah, let's look for the breakdown of this formation. Again, keeping in mind the 85 handle is really what clears the way down here for a much broader decline. And this is another one where the weekly charts have served us well. They have served us well all throughout the course of 2015 and 2016, looking for that broader setback in Aussie yen to inevitably get a much more assertive long-term long position on this pair. Pooja says above the London high. Yep, thanks. You got it, Pooja. Good luck on that. Mike says, Mike, do you use log scale or auto, and why? Thanks. No, I don't tend to work with log too much unless I'm working with a major crazy cross, Mike, but no. Excuse me. I'm losing my voice, and we haven't even, excuse me, we haven't even gotten to FOMC yet. Jeez. Okay, let's just take a quick gander back at Euro because we're continuing, oops, the weekly. We're continuing to move off here as the dollar presses higher. We're coming into the median line on Euro, and as far as dollar CAD is concerned, for those of you who are following that, it's still holding kind of that high. So I wouldn't be chasing this too much. This puts the DXY in an upward position too. Watch for that 99.93 near-term pivot in price here, but I do think, like I said, you look for a new high here in the index. Yep. Okay, I digress. That was Aussie yen. Dollar yen number 8. I don't really have very strong opinion on this, but we'll take a look for Gary here just for fun, I guess it were. Here's what dollar yen looks like. Look, if the daily chart is on point, I don't want to see yesterday's high being validated, and I'm still looking for that drop into 1135, 1180. Nothing really changed on this, Gary, from yesterday. You know, you're broadly, humbly, I'm looking for a drop either near 1135, 1180, or some sort of rejection against 116 again. Anything in between for me is just chop. So not a super fan of dollar yen, but you do need to have some levels in mind because dollar yen is notorious for moving rather aggressively on US data. Let's go ahead and just tweak these levels. You got a pretty well-defined range. 112.57 into 115.40 is kind of what you'd want to work with right now, and that's it. That's it. Again, ideally, you know, a drop into this zone is what would interest me in a crazy long position, or a longer-term long position. I shouldn't say crazy, but you know, there's not much to do from an intraday position. You're right slap in the weekly range. There's not even a weekly high or low that you could trade against here. So guys, just take it for what it's worth. Know where to pick and choose your battles. I just don't have any conviction here. And, you know, heading into this event risk, this is a pair that is likely going to see a good amount of volatility. So take that for what it's worth on dollar yen. I do want to touch base on Kiwi, sterling Kiwi, excuse me, from the previous update. Any questions on dollar yen, euro dollar, dollar CAD, Kiwi dollar, Aussie dollar, any of the Aussie crosses, the dollar crosses rather, ahead of today's release? I just want to, like I said, go really quick over to sterling key. This is a trade. Whoa, what was that? Ooh, euro key, by the way. Just missed 148.70. Not bad. But I digress. Back to sterling key. The this level, really nice hold. November reversal close. We talked about it, and the lower parallel. We saw quick downside break. Remember, we talking about this key zone being the bullish invalidation level, held like a charm. Here's the rally. Took out the weekly objective opening range high, and here we are taking out the first 74.10 level. So you look to buy pullbacks here while above 72.50 is still the level I would work with. Excuse me, 72.80 weekly open. As long as we stay above the weekly open, I'd like to continue to buy pullbacks here. Inevitably looking for 75.48, 75.50. That's a key 618 retracement, and also the 50 line at the current operative slope off the lows here. And if you take this, kind of take a parallel right off the highs, A, it actually catches the low here, and B, the median line actually converges in time a little bit closer onto tomorrow's trade. So just keep that in mind here. Whoops. Questions? Gary says, thanks for looking at the abomination. It was fun for me. Of course, it's easy to say when you're winning. Conwall says, commodities now. What's going on with commodities? That's number 9. Sterling Key. Any questions? Stay constructive above the weekly open. Look for a move inevitably into 75.48. Looking to buy a pullback here, especially if we get a move back towards the median line. By the way, guys, this setup, just to get you a quick update, is right here on the 30th. Okay, so we basically dropped right into this zone. We took out the weekly opening range high. We're looking for that move into 75.48. Okay, and again, huge region here. Massive, 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 massive. 100-day moving average, long-term slope resistance, 618 retracement, 50 line. It's stacked. So watch that region of resistance here. Let's take a quick look at the commodities, and then Pooja, I promise I'll get to the sterling crosses. Really quick, here's what gold looks like. Gold coming into some near-term support. Okay, so this shouldn't be a surprise to anyone either. This chart continues to play out. It's great. I loved writing about gold because I basically don't need to do anything. It just continues to play the same levels over and over again. So here's the median line, the basic and objective median line we've been working with since the highs that we made in July of last year. Doesn't get much closer than that. Support, support, resistance, resistance, perfect tag of resistance, looking for a new low. Now, I don't know if the low registers below here, but I still think the risk is possibly for a move into 1177 or 1171, okay? Here's what the intraday chart looks like. Near-term ascending channel formation just off the lows. You got a nice breakout of this near-term slope that we were talking about. Break, test of support, zoom and retest, failure ahead of former support, turned resistance. If we move back below 1203, I think it puts the premise back on the correction to the downside. And again, that puts the focus on possibly 1177. I was looking for it on the daily chart. Here it is. Swing low from the 11th. That's 1177, 1171, obviously the 50% retracement of the entire advance off the lows. So the risk is there, Conwall. Watch for this close here today. And specifically, if the dollar does mount that rally, a break below 1203 would certainly be more downside pressure you'd expect on gold if we see this dollar mount a little bit more of a stern correction off the support. All right, I don't want to initiate new short positions here with the same respect. If you are short, you want to bring your stops in a little bit, but you're banking on a move sub 1203 here for a larger correction lower. And just for near-term price action. Okay, now, I don't want anyone to get all confused. Again, if this is going to confuse you, kind of just don't pay attention to me, but I just want to see what this would look like if this does materialize into a higher, a more near-term high. And I just eyed this out right now. But here's a quick look. The reason that seems appealing to me is for this reason. You see this slope here? Resistance, 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 support, support, break, instant resistance, resistance, break, instant support. So I think we're working with something here on this slope. Even on the last two subsequent highs here, it looks like it caught that pretty nicely. Here's a 1 hour. Here's a 30-minute. Yeah, it looks pretty clean. And that would highlight, again, support basically, support basically where we're heading right now. Okay, so Conwall, look for a break below this region, and that would mark a little bit more of a significant validation in my mind for a near-term correction lower in gold. Objectively, of course, also you have basic trendline support, which also looks like it just gave out. Not bad. Yeah, I'd be looking lower in gold. Initially, you're at support, so the immediate risk is for a bounce off 1203. I'd be looking to sell that rally, inevitably looking for a move lower here. Kamwal, does that help? Does that make sense? Just think about where you are in the daily chart, and that's all you kind of need to know. Also, the weekly of gold, and I'm going to keep bringing you back to this every single week, and the reason is because we talked about the outside weekly reversal that we made off resistance, and the last couple of times that we've saw this have all led to a new subsequent low registering before price made a new high. So doesn't necessarily mean we got to go straight shot to hell, but certainly the risk is for a new low to register before you start to make any assertive rally back to the upside. That's gold. Number 10. Number 11, let's really just touch base on nat gas. Looks like this. And the only thing I just wanted to highlight here, Conwall, is the support structure that we talked about yesterday is still the level to beat. 309, 310, 311. Basic 50% retracement. You had slope support. Really nice pivot slope there. 100-day moving average, all converging right here. The objective monthly and yearly opening range lows. Well, not monthly anymore because it's a new month. But the objective yearly opening range low right there too. I don't necessarily know what you want to do with this one. You came into basic trendline resistance. It actually held pretty clean, and you rebounded right off it. So I'd be looking for a consolidation break between this median line or this basic trend line resistance and this support structure. You know what I mean? I don't want to get short into support. If you see a downside break of last month's low, you're all the way down to 293. There's room. But I don't want to be short into support. And with the same respect, I don't think you have the justification for the breakout just yet. Ideally, you'd see a break of this trend line, pull back, zoom, and retest, and move higher. But levels haven't changed as far as nat gas is concerned. All right, so take that for what it's worth. Again, Conwall, it's a big day for dollar event risk, so obviously all dollar-denominated assets will be moving, but just know where you want to kind of keep your focus. There's going to be a lot of juice in the dollar crosses, I think. Last but not least, copper is a dud, in my opinion here. I don't have anything. You know, you're kind of topping 272, that level we talked about, 271.5. You closed above it yesterday. I don't want to call that a breakout. You know, I don't know what the hell to do with that. On the near-term chart, we talked about the 1618 at 273. That actually caught the high exactly, which is disgusting. But you're not seeing much progress through that. So I think near-term risk is for a downside move here, and that would coincide again with some possibility of some dollar strength. Also note that you are getting divergence all into these highs. Price action making a higher high, oscillator making a series of lower highs. So while you're getting the divergent signal and the risk of a turnover, you quite haven't seen that materialize in price action yet. And I think that still leaves the risk for a near-term pullback here in copper. Again, if we breach these median lines, remember the ones that we've been following, Conwall, very clear what the topside target is. 293 would just be a very distant long-term target here. That's just a swing low from 2011. So pretty clear as far as the breakout targets would be concerned. I just don't have a game plan as far as how to initiate a trade here. Sterling Puja, jump into the sterling crosses for sure. Here's what British pound looks like. This is going to be number 12. And we'll see if we can't touch base on some of the other sterling crosses. But the level to beat is 267. I keep saying this wrong. I'm sorry, guys. Dyslexic this morning. 126.75. Well, I'll come back to that if I have time in just a moment. Just give me a moment. As far as the topside resistance in sterling is concerned, 126.75. Again, that's a basic 236 retracement. Just above it at 126.80 is the 100% extension off the low. That's exactly where we capped out last week. The pullback was an exact 38.2 retracement. And here's the rebound taking you right through the initial weekly opening range high. Shifts the focus up for me, but again, you got to keep on to that resistance. Can't get around it. It's still a level to beat. It capped the high exactly in November. It's the 236 retracement. It is the January high now as well. There's a lot of reasons just to be cautious here, but long and short of it is if we breach to 26.75, I'd be looking for a run on 27.98, which is, again, just a nice downside swing target here, and that converges on the 50 line at this current operative slope. It's right here. What else could we say about sterling here? Heading into the BOE, the one thing that you want to be mindful of is the focus is going to be all about the quarterly inflation report. Obviously, there is no expectation for change in policy from the committee or the MPC, and it's really going to be all about what the quarterly inflation report looks like and expectations to the outlook for inflation moving forward. If that continues to improve, which we have continued to see improvement on, any type of stoking of an interest rate expectations for the BOE. There's no expectations through 2018, okay? So any type of expectations for tightening or if the improvement that we're seeing might prompt a shift even in policy could fuel the fire here in sterling to the upside. Obviously, that's a far way out. The Brexit still obviously poses massive, massive risks to the economies, but I still think it's overdone. And from a technical standpoint, I think pound is ready and prepped for a stellar year here, or at least a start. Gary says, I got to ask a pro this question. Do you ever trade with your gut despite technicals? I know I shouldn't, but I get too tempted and I seem to be right 7 out of 10. Yep, I've measured that with all my trades over the last 4 years. Gary, the secret is, my friend, and then the point at which you have the most confidence is when your gut is the technicals. Okay, that's I don't separate the two. Does that make sense? I mean, I don't know what you mean by gut. If I'm watching price action and I'm getting excited and I kind of just start chasing price, nah, you still might be a lucky dude, Gary, right? For me, when I'm most confident is when my gut is what the technicals are saying. Now, there's going to be times where I want to just take a trade, right? Because I see price action, I'm getting all excited, and then I see what you're saying. But by no means is that a strategy, man. That's just chasing, right? Now, when I see that it looks like a breakout in near-term price, and whoa, the technicals have been pent up, the technicals are showing divergence, the technicals have given me a trigger, well, then your gut, the technicals, there is indifference. So Gary, I hope that offers some color there. But the point at which you should be looking to aim is when your gut is based on what the technicals are saying. Comwell says, you're absolutely right, Michael. Cheers on that. Gary says, yes, it makes sense. I do use stops. Of course, for example, I have a feeling with dollar-yen long. So the dollar-yen, again, I do like the idea. I don't know if we're done here. I don't know if we're done here. I still think it needs to kind of slam some more people before it makes a low. But at the end of the day, if we clear the weekly open, I think you look higher, period. We'll see. My least favorite, by the way, but probably the pair that will see the most volatility, interestingly enough. Okay, and that's sterling. Pooja, does that help on the British pound? So here's the hourly. Let me just see the 30-minute here. She says yes. All right, cool. So the weekly opening range is pretty clean. You gave it break to the upside. That puts near-term support right back here at the weekly open. Not sure what's up with the coding. Oh, this is the monthly open. I'm sorry. So I'd put the near-term support right at the weekly open. Again, topside break targets are pretty clear. 127.16. Just have a soft target there, but really look at 127.98. That July low should be a bigger play to the upside. Top performer versus the dollar today. And you have BOE, quarterly inflation on tap tomorrow morning. Big day for the pound. Big 48 hours, 24 hours rather for the pound with the Fed today. Actually, no, 48 hours. You got the Fed today, you got the BOE tomorrow, and non-farm payrolls on Friday. Should be a doozy here. Mike, when trading with a stop on a daily close above or below X price, how do you manage it as it can run away from you? I want to try these type of stops, but not sure if I should. Thanks if you have time. So, Mike, I think you're misinterpreting me, man. When I'm saying a daily close above or below, that's not necessarily dictating my stop. I will oftentimes cite that as what's needed to validate a bias. So if I'm looking at a breakout, and I see that price is breaking above a key resistance level that I'm looking at, I'm going to want to see a daily close above that to validate my bias. That doesn't necessarily pertain to an actual trade strategy of where I want to put a stop. And now there are guys who trade where, based on the daily close is where I want to get in and out. You don't want to do that on an intraday basis because of the exact same reason of what you're citing. A trade can certainly run away from you, 100, 200, 300 pips and then close right below your level. I'm not going to want to withstand that kind of swing against my account. So most of the time when I'm pertaining to watch for a daily close above or below, I'm looking for that close to validate either a breakout or a failure of said breakout. Mike, does that make sense? A very important point. Okay, cool. He says, Mike, thanks, I got it. Pete says, wanted to go long sterling dollar. Missed Jamie's entry at 124.15. Yes, so did I. So what's next? Try and wait for the pullback to 124.33. I feel like jump in now. I'm chasing, but as Gary said, that's what my gut is telling me. So look, I want to be long sterling too, guys. Knowing the proper direction is just 50% of the game. It's not, just enough that we have the right directional bias. There needs to be a game plan behind it, and there's just no justification for any type of stop, in my humble opinion here. Look, for me, ideally on a near-term front, Pete, if you get an exhaustion low near 125.46, that's sort of the initial area I'd start to look for some support. 124.33, we talked about this early in the week, right? This was the major area of support that we were looking for initially. 2016 high day low day close, et cetera, et cetera. From here on out, what's done is done. From here on out, this would be an initial area, the monthly open now, the weekly open, that median line that we've been tracking of support, or, Mike, a breach of 2670, 2680, and a zoom in retest, and you look to play against that low on a launch back into 2798 and subsequent topside targets. But I'm with you, man. I definitely cannot warrant or even encourage trying to take a stab at the long side from these levels. Even though it could work, but I could win the lottery too. That's not how you want to trade your account, right? That's just gambling. I think you need to wait for a more substantiated pullback. The median line hasn't been all that messy, guys. It's been decent. Go back to the 4-hour. It's been okay. So if you get a stunt back into that region, sort of a fake out, might be the initial area of support to look for. I have the feeling, I kind of have a gut feeling, if you want to talk about guts, guys, that this thing is going to see a little bit deeper of a spill and sort of show a little bit more of a consolidation before it breaks out. But at the end of the day, I am looking for a resumption of the broader trend back to the upside. Hey, Pete, you're more than welcome. And same to you, Mike. Cheers, mates. Okay. And that brings us into the 9:30 hour. Any other questions as we head into the event risk? Play it light. If you're new to intraday trading, if you're newer to the session here, guys, and you're kind of freaking out a little bit or you're a little nervous, just take it easy and let this one pass. There's really the tricky part is that it's the first it's the first interest rate decision of 2017. The next rate hike isn't expected for another 5 months, so they can use this time to pad with whatever commentary they want. And there's a new administration of which is doing radical changes to fiscal policy. So this is why I don't blame you if this interest rate decision per se might not be your ideal scenario to kind of play. That said, the levels are what they are. We are at key levels. Watch the dollar index. You know key support at 99.53. We talked about that. We're testing near-term resistance now. Again, bearish invalidation 100 spot 43. My favorite setups are still going to be over in the euro, looking for a possible setback there to get back on the long side. Also, with the dollar CAD trade that we've been in since overnight trade, looking for a possible breakout there. Both of these trades are pretty close to where you would be, are pretty close to the invalidation levels. So if you're wrong on these, or if the levels are invalidated here in today's trade, specifically on the close, pretty know about where you're going. Mike, can you talk about your signal service? So Mike, we're in the process of coding that out now. It's not my personal signal service. It's going to go more hand in hand with the setups that me and Jamie put out for you guys on a day-to-day basis. Only we'll have a service that you'll be able to turn on and off that'll actually give you alerts as price is approaching or as the technicals are giving us those signals to take those positions. So I will have more information for you, Mike, on that hopefully by the end of next week. But that is in the works and hopefully should be out very, very soon. All right, guys, Jamie's not up on tap, Pete, obviously because the FOMC interest rate decision. So the midweek strategy webinar will take place tomorrow. We'll clear out some of this noise and we'll get through the BOE interest rate decision and quarterly inflation report as well. And then Jamie will be up on tap tomorrow after our webinar at 12 noon. I will see you guys tomorrow morning to cover the aftermath of both this and the BOE and to give us a nice preview heading into non-farm payrolls. Best of luck trading today, guys, and I will see you all tomorrow morning. Cheers.